Hi traders, this is Senior Account Manager Adam House hosting the Daily European Open for this Friday, the 8th of the 9th, 2017. We've had an extraordinary day on the market today with really big moves on gold and the AUD USD and the Euro USD in particular in response to broader sell-off weakness on the USD or the US dollar. So we'll just go into a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so we'll just take a quick look at the risk events that have happened. Now, if you're wanting to find these out yourself, you just go to dailyfx.com and go to your calendar, go to filters, and we're going to go to our time zone, which is Melbourne. For us, this is. And then we'll go to a weekly update. Okay, so we had, over the course of last night, we had the European Central Bank keep their rates on hold as expected at 0%, with the marginal lending facility kept at 0.25%. So the euro did respond bullishly to that announcement when Draghi had the press conference, a little bit more hawkish than normal in his outlook on general sentiment and economic growth. Coming up to tonight, we've got a whole host of announcements. The most important ones are going to be the CAD net change in employment and the unemployment rate for the Canadian dollar. 15K forecast. The previous result was 10.9K. They're looking at 15K net change in employment and the unemployment rate holding at 6.3%. It's been very strong data out of the Canadian economy of late in support of this, sort of this initiative to back the Canadian dollar generally. Don't forget that the Canadian dollar actually had their rise in interest rates of 1%, which was, 0.25% basis increase on the actual forecasted announcement. So that was a shock announcement which sent the Canadian dollar appreciating against most other majors, particularly driving the USD Canadian pair down. So we'll look and see if we get any expected better jobs numbers or any sort of decrease in the unemployment rate, then that could spell, further Canadian strength against an already weak US dollar, and would expect it to actually drive that pair down. So we'll just take a quick look at the charts today. As we can see, there's a lot of green activity here, a lot of bullish activity in response to the Aussie and the Euro and the Pound having a really bullish phase against the weaker USD counterpart. The other reason that this has happened as well, that in general terms, is that we've seen some data coming out of the US generally, which has really supported the view that interest rate increases won't be as urgent as once expected. So there has been a downgrade in growth forecasts. There's been a downgrade in interest rate increases as well, generally across the board. And that's spelled generally sort of a broad sell-off on the US dollar, which you can see here on the USD yen, and has really seen a rally on the Australian, the Euro, and the Pound as a result against the already weak US dollar. Correspondingly, gold started off the day today at around about the 13.48 level and has since appreciated $5. So trading around 13.53 at the moment, broken a daily resistance, and has really sort of seen, some really strong gains. Got the oil price at the moment. Oil's hit a really good level of support here as well on the daily time frame at 47 a barrel. And we're seeing, demand outstripping supply in that respect. And we're seeing, some really sort of compelling data to look at oil going back to 50 or even 51, 52 an extension as well. The pound has shown a bit of weakness against the stronger yen. The yen being the safe haven asset. In the back of everybody's mind, still obviously a situation that won't go away is the North Korean conflict. As we speak at the moment, there's a lot of Chinese whispers on the market in terms of when will the next missile attack be, if there is one, is it imminent? Whilst ultimately no one knows, it is a situation that has put the market in a broad sell-off mode on the US dollar. Correspondingly, on the ASX, you can see here today that's actually opened up lower as well. So we're really seeing compelling data to suggest that, that worrying jitters on the market are really continuing to play on investors' minds. Under such circumstances, obviously the US is sold off, and usually the yen and gold are backed as a result. So we'll just go through a few intraday targets. We've got the Aussie US dollar long positions preferred with targets of 81.40 and 81.75 in extension. Got the S&P 200, downside prevails with targets of 5645 and 5630 in extension. We've got the Euro US dollar with targets of 1.21 and 1.2135 in extension. Got the GBP USD with the bias remaining bullish with targets of 1.3145 and 1.3170 in extension. USD JPY has a target of 107 actually eyed at the moment, and we've seen a really broad sell-off at the start of the trading day today, but we've got targets of 107.55, 107 in extension. GBP JPY, we have targets of 141.50 and 141.15 in extension. Gold has targets of 1362 and 1368 as a buy in extension. And lastly, we're looking at a further advance on oil from Trading Central with targets of 49.55 and 49.90 in extension. Just here, sorry. So the main focal play that will come in tonight, obviously we're coming up to a bell curve in the market with, obviously the close of the market happening on a Friday. The main focal point will obviously be on the Canadian net change in employment and unemployment rate at 22.30. So expect some volatility around that time. Currently, we have a bearish pressure preferred on the USD CAD in general. As we said, the US is broadly weaker against a stronger Canadian dollar, and that might even be expected to continue on, good data coming out for employment and the unemployment rate. If you have any questions about those particular trading setups or anything in general on the market or on your trading at all, please give us a call here and to speak to your respective account manager, and we'll be happy to assist you. But in the meantime, thank you very much for your attendance, and we look forward to seeing you on Monday. Have a great weekend. Thank you.